Okay, Steve, let's keep moving forward here. What's been going on in the trans community?
So this is this is
Start that one
Transmedics.
again if you want.
No, that's fine. This is Transmedics. So these are we've covered these before, but it's worth just quickly touching what they do. It's a medical technology company, basically focusing on transforming the sort of transplant market. Its main product is called the organ care system, and it's essentially a portable system for preserving, optimizing, and monitoring donor organs, in particular hearts, lungs, and livers outside of the human body. Basically, we used to use a sandwich cooler with an ice pack in it and just hope for the best, whereas this system keeps the heart beating with blood perfusion. It keeps the liver producing bile and keeps the lungs breathing, which they have proven to the FDA, despite what a couple of short sellers have said, works perfectly well. There's also been people who've been out there and called them a plane company because they bought some planes to try and transport these organs quicker. And apparently that turns you into a plane company. But yeah, this earnings report was very good, I thought, Steve. So here's a quick run through because we've got another one to do. So I will rattle through this and we'll see what you think. So revenue was up 37.7% year over year to 157.4 million. Analysts wanted 146 million, so it smashed the pants off it. Earnings per share smashed the pants off that as well, 92 cents in EPS. Analysts wanted 45, so over double. Net income was 34.9 million, an increase of 22.7 million year over year. Operating margin 23.2%, so very, very good. But they said they can improve this even further. They're thinking operating margin will be about 30% in the next 2 to 3 years. And in terms of product revenue was 96.1 million, that grew 34%. Service revenue was 61.3 million, reflecting about a 44% year-on-year growth. Cash position, 400.6 million in cash on the balance sheet at the moment, Steve. That's 10% of the market cap, an increase of 90.5 million quarter over quarter. Revenue by organ, so liver revenue grew by 50.7, heart revenue was up 13.4, and lung revenue had a small decrease of 2.5% year over year. They updated the guidance, Steve. They said it's going up to 585 million to 605 million. That's about 35% growth in the midpoint. OCS program, the company's national OCS program covered about 79% of its flight missions using its own aircraft fleet in Q2. It's got 21 aircraft at the moment. It's focusing on moving internationally, specifically into the European market. It's also got a new next-gen lung trial, where it's basically trying to build the next version of the OCS system for lungs that has just received FDA approval for them to push on with. So that was essentially it. The earnings call and the Q&A is essentially Waleed Hassanein, the CEO, getting mad with people for mistaking other people's failings for Transmedics failings, and essentially answering some sort of banal questions that he'd already previously answered in his opening statement, Steve. So I wouldn't want to bore people with that. I will just say, if you are interested in this company for any particular reason and you go to do your research, if you're squeamish, do not go on the website, because you'll see hearts outside of the body beating, you'll see lungs outside of the body breathing, and you'll see livers outside of the body biling, or whatever it is, and it's grim. But yes, a very, very interesting company, Steve. I'm up quite a bit on this one. This maybe 60 or 70% because I bought it somewhere at the beginning of the year. It's had a really, really good year. Doesn't look too good on the month charts, though. It's still down about 7.5% because it had a 11.5% week, Steve. So I think it deserved it. I think this report is fantastic, and I think it puts the sort of crappy short report to bed, Steve, even though I saw on Twitter today they were trying to double down on it, which I think is moronic.
There's always a danger with these kind of companies of focusing on... There's always a danger with any kind of company, but especially with companies like Transmedics, more so than anything else we're talking about on this show, or indeed most shows, of worrying about what's going on quarter to quarter, even year to year to some extent. I mean, the point of Transmedics is it's in the very early stage of its growth. It is growing very well. But okay, so we saw revenue growth come in at 37%, and that was considered to be good. If it had been 30%, would that have been a problem? Don't know. If it had been 45%, would that have been a mad sign to get carried away? Don't know either in these cases, where you're looking for these kind of big things and you're essentially thinking to yourself, I think the way to go is to say, well, what's the start point for this? What's the end point for this? And I don't really care too much about what the path there looks like. If you think this company could be 20 times its current size or something like that, so taking you down to something along the line about, well, you're currently looking at a forward PE ratio of sort of 44. That would take you to what, twice earnings eventually if you get there. It doesn't much matter as long as if it takes you 15 years, 20 years to get to that point. It doesn't really matter where you are at any intermediary point along the way. Stock is very volatile, and I understand why, because people have a tendency to sort of project things almost indefinitely into the future, and revisions to estimates become quite dramatic when you start knocking big lumps off revenues or adding big lumps onto revenues, and that works its way down the income statement. My sense is here, this was very good. There are plenty of times that they've thought about this where it's not been, in their view, very good, possibly incorrectly, confusing other companies losing market share for them losing market share when they're the company that's taking it, not the also ones that are losing it. Market's still growing here. It's just that they're busy stealing everyone else's. But I think to some extent, watching this thing quarter by quarter, it can be easy to get sucked in on these things. And I thought this was very impressive. In short, Transmedics is clearly on the way. It's the kind of company I feel like I wouldn't necessarily care if it didn't report every quarter. I know they have to for regulatory reasons and so on, but if they only reported once a year and operated on okay, we're going to report once a year, you can buy or sell the stock once a year, we'll open the market for a day each year, that would be absolutely fine with Transmedics. You look at where you kind of were a year ago, look at where you are now, and look at all the places you've been in between. And to some extent, and to a large extent, none of those intermediary places really matter. And Transmedics, I think, is on its way to doing some good stuff. And people can worry about its aeroplanes or whatever the hell else they like. That is just to some extent a distraction from what appears to be pretty strong results, Steve.
Yeah, I guess my major worry now, Steve, is that at 4 billion, you would assume somebody just wants to take this out. And, well, essentially, it's not 4 billion, is it? Because it's like 3.6 billion, you would assume, because of the cash in the account, you would assume. Somebody thinks, well, I might as well take this out because it's proven itself to be effective. It's now profitable. It's growing at a decent rate. We could tack this onto, some kind of pharma company that has a medical devices arm, maybe the split out of GE into the GE healthcare arm would be tacked onto that. That would be a good acquisition for them at this. It's basically nothing for them to acquire this. And that's the issue I think I've got with it. I don't think it'll get the opportunity to get its full potential. But let's not beat around the bush here, Steve. It's got Intuitive Surgical like potential. I think it's a similar kind of area. It's a similar kind of product. Obviously, they can expand into other things and obviously go abroad and do that as well. And servicing for these machines is obviously something that they do and can continue to grow. There's quite a lot of untapped potential here that is not covered by the 4 billion. So it's one of those things, Steve. It looks expensive, but it's growing like a weed. And what is expensive today may not look as expensive in sort of 12 to 24 months. So I like it a lot, Steve, and I'm willing to sit on it for now. But I also may increase this position up a little bit as well.
Interesting comparison to Intuitive Surgical, which I associate as being quite an expensive stock, particularly given its growth. It grows actually pretty well, better than I thought. I'm looking at it here, but they trade at similar PE ratios, and I would say Transmedics has a lot more scope for growth than Intuitive Surgical does right now. I mean, Intuitive Surgical is by no means a kind of done business here. I expect that to keep moving higher pretty well, but it is trading at a mighty set of multiples there for a business of its, I don't want to say lazily of its size, but of its stage in development. I think so. Yeah, Transmedics look kind of interesting there. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.